Okay, in this short video, I want to emphasize financial statement relationships. In other words, how do the financial statements fit together? Over here to the right, I have a summary of the financial statement, the formulas for each one. Here's the income statement. Revenues minus expenses is net income. And then that net income goes over to the statement of retained earnings, is added to the beginning retained earnings, subtract your dividends, and that gives you your ending balance of retained earnings. And it's that ending retained earnings that appears on the balance sheet. And the balance sheet, of course, is a summary of the accounting equation. Assets equals liabilities plus owner's equity. And owner's equity consists of paid-in capital and that ending balance of retained earnings. Okay? So to illustrate how these fit together and to challenge you to think about those relationships, I have 4 years of totals from the financial statements. All of these numbers are totals from the end of year financial statements. And 20X1 is our very first year of operations. So at the beginning of year 1, we had nothing. At the end of year 1, these are all of the account balances. Some of them are missing. All the pink spots are missing. And I guess that's pink, tan. Then we have to find the missing pieces. So let's see what we have. First of all, here's our balance sheet information. And we know that assets equals the sum of these three: liabilities, common stock, and retained earnings. So these three add up to 180. So we know that our total assets has to be 180. On the income statement, we've got revenues of 70 and expenses of 40. So revenue minus expenses, that is obviously 30. And we're missing the amount of dividends we paid, but we do know in our first year of operations, we started with retained earnings of 0. We added net income of 30. We just calculated that on the income statement. We had a missing some amount of dividends, but we do know that our ending retained earnings is 20. And so we'll plug that in. So looks like we're missing 10 for our dividend amount. Never hurts to, once you plug in a number, go through the math, make sure it works. 0 plus 30 minus 10 equals 20. So we're okay. That's the information at the end of year 1. Now let's go to the end of year 2. On the balance sheet, we're missing 2 things, so we're going to have to start somewhere else. Revenue minus expenses, 100 minus 60. We can see that our net income is 40. And then that 40 will go down here and is added to our beginning retained earnings, which we know is whatever we ended last year with. So last year's ending retained earnings becomes year 2 beginning of 20. Add our net income of 40. We had dividends of 10, so we'll subtract that. And so our ending retained earnings, 20 plus 40 is 60 minus 10. That's going to give us 50. And so that goes onto the balance sheet. Ending retained earnings of 50. We know that these 3 need to add up to total assets. So far we've got 140, so the missing amount of common stock is 110. Okay. I've got a little bridge here for retained earnings just to illustrate how that what we summarized down here on the statement of retained earnings you could think of up here. The beginning retained earnings, to get to the end, we added 40 of net income, subtracted our dividends, and that's how we got to the 50. Okay. Let's move into year 3. Year 3, total assets are 430. So we know that liabilities and owner's equity needs to add up to 430. So far we've got 370. Looks like we're missing 60. So yes, that is what it takes to add that up. On the income statement, we're missing our revenues. So it looks like we're going to have to find our net income first. So we're going to have to work through the statement of retained earnings to figure out what our income would be. The ending retained earnings at the end of year 2 was 50. So that's what we started year 3 with. We had net income, which we don't know. And then we're subtracting dividends of 20. That's given to us right here. So 50 plus something minus 20 would give us our ending retained earnings. So we're missing a number right now. We do know that our ending retained earnings is 60. Well, so far we've got 30 down here, so we are missing net income must be the other 30. And yes, that's what it takes to add up to 60. So again, to get from the beginning to the ending retained earnings, we added 30 of net income. That took us to 80. Minus 20 brought us down to 60. And so it looks like year 3 is complete. So we have one more year. We're missing total assets. We're also missing retained earnings, so we're going to have to start down here. So income statement, revenues of 200 minus 230 of expenses. Looks like our net income is a minus 30. In fact, I would call that a net loss. Our expenses were more than our revenue. So when we get over here to the statement of retained earnings, which the beginning retained earnings, last year's ending, is 60, but then instead of adding net income, we're going to have to subtract that net loss of 30. And then we would still subtract the dividends of 10. So 60 minus 30 is 30, minus 10 brings us down to 20. So ending retained earnings is 20. So we're going to plug that in here. Again, you can thinking about going across that line. 60 minus 30 net loss minus 10. That got us to 20. And so liabilities and owner's equity adds up to 500. So our total assets at the end of year 4 is 500. Okay? So that's how it works. In the practice problems, you've got some other problems like this where you have some missing amounts, and you need to find those missing pieces. Again, thinking about how those financial statements fit together, and you would certainly want to expect a problem like this to be on the exam. All right, have fun with it.